In this video, I'm going to go over the top 3 stock picks for October, as well as a few bonus stocks that I'm investing in this month as well. Hi, I'm Jeremy Zargami, and welcome to my channel. If investing in stocks, real estate, and personal finance interests you, you've come to the right place. So be sure to like and subscribe to this video for more content like this. So the format of today's video is going to be a little bit different. I'm currently, at the time of this video, I'm going to be in New Orleans, visiting 2 of my best friends in the whole world, probably eating beignets, hanging out, maybe have some chicory coffee, walking around. It's going to be great. But I want to show you guys the stocks I'm investing in this month. And I want to go over a few things that interest me about each one. So I'm going to pull up my Robinhood app and we're going to go through each stock one by one. Okay, so I'm pulling up my Robinhood app right now. And I'm going to go into October 2020. Okay, so we're going to click on the first one. So my first stock I'm investing this month is Pfizer's. Okay, so Pfizer. So it's PFE, ticker PFE. Okay, so it's currently at $35.95. And let's scroll down. Pfizer is a drug company, pharmaceutical. Let's see what it says. Engaged in the discovery, development, and manufacture of healthcare products specializing in medicines, vaccines, and consumer healthcare. It operates through Pfizer, blah, blah, blah. Yeah, so vaccines, internal medicine, oncology, which is cancer, inflammation, immunology, rare disease, and consumer healthcare. So there we go. So employees, it's been around since 1849. Did not know that. Okay, so scrolling up. So I'm gonna go to what Morningstar says. Okay, so Morningstar has a rating of 4 out of 5 stars, which means that it's well priced right now, which means it's like a pretty decent value. So right now it's at $35.95, and their fair value price is $42.50. Okay, so it's definitely underpriced right now, which is good. Means it could be a good time to buy. It definitely get some value in there. The economic moat is wide. Okay, so that just means how well this company sets itself apart from other companies, similar companies to it. The uncertainty is low, which is good. So that means that it has low risk of going out of business, something happening. So it's a steady company, and so it's got a good pipeline, like it says up here. Pfizer's strong portfolio of entrenched drugs and pipeline sets up steady growth. So their stewardship also is standard, which just means they're pretty good with their money. But yeah, the uncertainty being low is good. Just because when you're investing in stocks long term, you want to know that your investment's safe. Okay, so that's very important. So the analyst, which I don't really look at this, but 16 random analysts, whoever these analysts are, have 50% buy, 50% hold. But the current dividend yield is 4.16, which is a solid dividend yield, which is another reason why I like to I want to invest more into this company. Okay, the PE ratio is 14, which is super low. It's actually really good. Which means that it is undervalued, or at a little bit undervalued. 52-week high is 40, 52-week low is 27. Has a market cap of 200 billion, so quite a big company. So coming up here, so I only have 10 shares of it. It's definitely need to add. I'm up 7.31%. Definitely need to add position on this one. Okay, so Pfizer, I'm investing in this one this month. It's a great stock. Okay, the second one on my list is Microsoft. Okay, so a lot of people, might think oh, why are you investing in maybe an overpriced tech stock? But Microsoft has a lot of good things it's doing and a lot of big things coming up for it. Okay, so I only have 2 shares of Microsoft, which I'm really sad about because it's up 32%, and I wish I would have bought more. That's always the case though, right? When stuff goes up, you're just like, man, I should have bought more. I should have known. I should have dropped 10 grand on this stock, but you just don't know. So it only makes up 0.7% of my portfolio. This is why I want to add more. Okay, so we're scrolling down. So it has a $1.52 trillion market cap. This is a huge company. So it's massive. One of the biggest companies in the world. PE ratio is 35, which is a little high, but a lot of the tech companies are super high right now. The 52-week low is 132, 52-week high 232. Okay, it has a dividend yield basically of 1%, so 0.98%. Which is pretty solid. I mean, a lot of tech companies don't even have a dividend at all, so that's great. Let's keep scrolling down. These 32 mystery analysts say that it's a 91% buy and a 9% hold, so take that for what it's worth. It says Microsoft flexes cloud muscle, so they're getting pretty big into the cloud space. They got a good, economic moat with the cloud. So Morningstar rates this 3 out of 5 stars, which is fair priced. The economic moat is wide. Okay, I'll go into that a little bit later, but that's always good when the economic moat is wide. It means that they have a big differentiator with their competition. Fair value is $228 a share. It's currently at $200 even. Uncertainty is medium, which is not bad. I'm kind of surprised that it says medium. I'm not sure exactly why. Maybe just because, I don't know, tech. It seems like tech isn't really going anywhere. So I'm not really sure why it says medium. But that medium's not that bad. It's not bad. It's not, if it's not high risk at all. Like, so I'd have to look into that deeper to see why it was medium instead of low. But medium's not bad. And their stewardship is exemplary. So, which means they're super good with their money. The money that they get through, their investors and all that stuff, they use it really well. They make a ton of money off, like, from the investment, the money that they get. They're able to multiply it, and they do really well with their money. So exemplary is always important to see. Looks like they've exceeded earnings the last 4 quarters, which is really good to see. And scrolling down, I guess I didn't really read about Microsoft. I feel like everyone knows what Microsoft is. Engages in the development and support of software services and devices and solutions. The big thing for me also is the Xbox. The Xbox Series X is coming out, and I feel like Microsoft versus Sony is going to be a big deal in the next year or so. So PS5, Sony has PS5 obviously, and the Xbox Series X is Microsoft. So personally, one of the reasons why I think Microsoft is going to win, and it's funny because a lot of people, I did a poll on Instagram, which you guys can follow me on Instagram. I'll put my handle somewhere here will be the @JZargami, handle. You can follow me on Instagram. I did a poll, and I said, are you going to be buying, or would you buy the PS5 or the Xbox Series X? And it was very close, but the PlayStation actually beat out the Xbox, which I was very surprised about. But I think that was just like, what would you buy? When it comes down to it, I'm not sure how many people are going to actually spend the $499 to buy it, especially when people are not even paying rent right now. So I think like 8% of people, only 78% of people paid rent last month. But you never know. I could see people charging on their credit card or whatnot. But back to my point, and what I'm trying to say is that the Xbox Series X has a $499 option, and it also has I believe it's $299. I'd have to look that up again. I think there's a $499 option, and I think it's $299. I'm pretty sure it's not $399. I think it's $499 and $299. So, and the PS5 has a $499 and a $399. So I really think that $299 option, the smaller Xbox Series S, I believe it's called, I think that one's gonna really set Microsoft apart. I think a lot of people are hurting financially right now, but they do want that new console. People are really big. I mean, video games are such a big deal right now. I think they will stretch for getting at least that $299 console. And like for Christmas time and stuff like that, Christmas time is going to be weird and really hard for people this year. And so I think a lot of people will buy the $299, the Xbox Series S for their kids, or maybe even themselves, as opposed to the $499, even Series X or PS5. And even the PS5 without the disc, I forget what it's called. It's like solid state, but it's like $399. So I think that $299 Xbox Series X is really gonna like boost Microsoft's sales and stock up, and so I'm looking forward to that. So I think getting into the stock right now, especially because it's kind of hitting a dip right now. I think it was up at 230, and now it's back down to 200. So I think right now is a good time to get in a little bit. Doesn't mean you have to put everything in. Don't go all in. Just get some exposure into Microsoft, and I think you'll be happy about that. My third stock on the list is AbbVie. So AbbVie is at $87.16. Let me scroll down because maybe people don't know what AbbVie is. It's a research-based biopharmaceutical company which engages in the development and sales of pharmaceutical products. It focuses on treating conditions such as chronic autoimmune disease in rheumatology and gastroenterology. Those are big words. And dermatology, oncology, including blood cancers, virology, including hepatitis C virus, and human immunodeficiency virus, HIV, and neurological disorders such as Parkinson's disease, metabolic disease, comprising thyroid disease, and complications assorted to cystic fibrosis, pain associated with endometriosis. These are crazy words, okay? And other serious health conditions. Okay, so basically, it's funny because my wife's dad actually works for AbbVie. That's not why I was investing in this company before I even knew that. It was just coincidence. But their big thing is they have basically oncology medicine, so medicine for cancer patients. So, and they're the best at it. Like they have this cancer medicine that is just sets them apart from any other company. So it's funny because their economic moat says narrow. I think it's because they're coming up on like something with a patent is coming up, and they might get some competition from generic companies, and so generic brands, and so I think that's why it says narrow. But I guess they do Botox sales too. So it says coronavirus concerns will likely weigh on new drug launches and Botox sales. Okay, so Morningstar rates it 3 out of 5 stars, so it's pretty fair priced right now. Economic moat is narrow. I'd have to look into that more. But they definitely do have patents on certain drugs. It might, like I was saying, it might be because they're coming up soon, but still, the fair value price is $97 per share. They're currently at 87. Okay, so they got a little wiggle room there. The uncertainty is medium, and the stewardship is standard. Okay, so what I like on the 18 random analysts, say 72% buy, 28% hold. What I like about this company is the dividend is fantastic. So it has a 5.2% dividend, which is so good. And this is a solid company. This is a company that's going to be paying this dividend. Yeah, so I have 6 shares. Not, only 0.9% of my portfolio. I'm up 5% on it. I definitely want to add position on this. It's dipping down. A lot of stuff is dipping down right now, which is always a good time to buy. A lot of people freak out and they just like hold their money. When stuff's starting to dip, you just want to just put in a little bit. Okay, so when stuff, I've made the mistake in the past is like when stuff dips like crazy, it's like I'll just like put all my money in right away, but it's like then it just keeps going down. I'm like, no, and I have to wait for it to come back up. So when stuff dips down, just put a little bit in, and then if it dips down again, put a little bit in. Okay, so depends how much you have. Okay, so if you have like 10,000 to invest, or let's just say you have 1,000. Let's say if you have 1,000, every time it goes down, you know, a couple 3%, even especially if it's like 4 or 5% or more, put $100 in, and then if it goes down a little bit more the next day, put another $100 towards it, and then just keep chipping away. Every time it goes down, just put a little bit more in, and then once it starts, you know, if it goes up, then you can kind of wait a little while and see what happens, and then if some news comes out and it goes down again, buy some more. So that's kind of what I like to do. That's how I like to do it. It's called dollar cost averaging. Okay, so I have bonus stocks. Okay, I have 2 bonus stocks for you. One you probably already know. The second one you don't. So, or this first one you don't. Second one you probably know. But this bonus stock, okay, is Philip Morris, ticker symbol PM. Okay, so Philip Morris is a tobacco company, and before you get on my case about this, I just want to say that I've thought about this. I've thought about if it's an ethical or moral dilemma that I'm investing in a tobacco company, and I came to the conclusion that it is not. Okay, so yes, tobacco is not healthy for you, and as a personal trainer, I don't recommend that anyone use tobacco. It's not good for you. Okay. On the other hand, I can't tell people how to live their lives. A lot of people like tobacco. Some people, you know, whether it's cigars, whether now it's like e-cigarettes and stuff like that, or God forget, yeah, like if it's regular cigarettes, it's cool if that's your thing. But you know, people, there's different forms of tobacco, right? And it's kind of, it's just not up to me to tell you what to do, basically. But never, like, this company is solid. Like, I don't think tobacco is going away anytime soon, and I don't think my small few $100 investment into this company is going to affect the world that much. Like, if I don't invest, I think the same amount of people are going to use tobacco. If I do invest, I don't think any more people are going to use tobacco because of me investing in this company. So this company is a tobacco company, okay? So just heads up, don't at me. Yeah, I've thought about this. I thought about if it's bad, if I shouldn't, because it's a tobacco company and they you know, there's a lot of bad things that it's just like, I've thought about it. Okay. And so I've came to the conclusion that like I said, my few $100 is not going to change the world. Okay. In that way, people are going to do what they want to do. Okay. So, but it's a good company to invest in, and then I can use that money for good and I can do great things with it. So I think from that perspective, I'm okay with investing in it. Okay, so it's up to you. You make that choice. So, Morningstar rates it. All that being said, Morningstar rates it 4 out of 5 stars. Okay, the economic moat is wide, which is great. Fair value is $98 a share. It's currently at $75. Uncertainty is low. Stewardship is exemplary. So on paper, it just looks so good, right? And so random analysts like it, 78% buy. Dividend yield 6.08%, super high. Okay, so it's a solid dividend. The PE ratio is 16.5. That's really good as well. It's a $117 billion company. 52-week high is 90, 52-week low is 56. And I have a whopping 9 shares, 1.18% portfolio diversity. And I'm up 3.59%. So I definitely want to add positions on Philip Morris. It's dipped. Let's see, it's gone down 6% in the last week. Yeah. So so I think it's a good time to get in. I feel like on it, it's dipped a little bit, but it's actually exceeded expectations the last 4 quarters, and I just think it's a solid stock to invest in, and it has a solid dividend, and So like, again, you have to make that decision. You have to, if you morally think that that you have to make the decision to invest in basically in a tobacco company. Okay, that's all I'm gonna say. That's the last I'm gonna say about it. Okay, and the last stock, and I made a video about this, and I'm big on this stock, is Tesla. Okay, so my Tesla stock, super pumped on Tesla. It's gone down a ton after Battery Day. People didn't really understand what happened at Battery Day and the magnitude of like what Tesla's doing. These short-sighted, like short-term investors all are selling out right now. So it went down like 12 or something % today, and for market hours and then after hours. I think it's a great time to add position. Anytime Tesla goes down, and they have these big swings, right? They go up 10%, 20%, and it'll go down like 10%, 20%. So or whatever, like there's these big dips. And so anytime it's been dipping, especially, it's crazy that it dipped on such good news. It's just because Elon said it might be 18 months to 3 years out for this new technology. But this new technology is like revolutionary. They're like, we're going to reduce cost by 56% and increase battery range by 50% and power by 6%. And it's like all these things that he said were like amazing. And then people are like, oh, like, shoot, like it's not going to be for another 18 months to 3 years. Like he announced a potential car in like 3 years. It's fully autonomous, $25,000 entry price. And it's like, I'm like, how could this stock go down? Like, I don't know. I'm not going to like question it, but the fact that it's dropping by so much, I'm just continuing to buy, just slowly buy in, like I said. So it depends how much money you have to invest. Whatever amount you have to invest, every day that it goes down, it's like a big red day, just buy in a little bit, right? So like I said, if you have let's say if you have $10,000 to invest, every day that the stock that you really want goes down, maybe put in $300 each time or $500 each time. Okay, if you have like 10,000, this is if you have 10,000. If you only have 1,000, put in like 100 or 50 or 100 each time the stock goes down significantly. Okay, so Tesla's that fifth stock that I'm investing in. I actually thought it was surprising that so it's a Morningstar specs on Tesla is just not great, okay, because they feel like it's so overpriced right now. But I don't think it's ever going to come back down. So the prices, like when it dips down right now in the 300s, it's like maybe like if there's a huge crash, it could come in the 200s, and that would just be like great buying opportunity. But like, I just don't think it's coming back. So a lot of this stuff is behind, but I did see that Morningstar actually changed their fair value from 173 to 195. So, yeah, I don't know why. Like, it's just funny the way that analysts look at this right now. And so looking at the Morningstar research on this is not really helpful. But they have exceeded expectations last 4 quarters. That's why they were potentially going to be put in the S&P 500, which I think will come eventually in the future. But I'm big on Tesla stock right now. Definitely adding. I bought a couple, like 3, 4, 5 shares just today, as it went down, and so I'm going to continue putting just adding position as it on all the big red days. I'll buy a little bit, and in 3 years, people who sold today are going to be kicking themselves because the technology that they talked about on Battery Day was just insane. And it's just crazy that people are so short-sighted to be like, oh, they think 3 or 18 months to 3 years is far away, but that goes so fast. Like, how fast is 2020 gone, right? It feels like a blur, It's definitely unique circumstances, but years go by so fast. So 3 years will be here before you know it, and people will be like, oh no, and the stock will be 2 or 3 times higher than it is right now. They could have 2 or 3x their investment. So hindsight's 2020. If you got value from this video, don't forget to hit that like and subscribe button. to continue to get content like this. Comment down below with any questions or feedback. I would love to hear from you all. And be sure to follow me on Instagram. My posts are pretty much daily. Also, don't forget your 2 free stocks down below in the description. And if you sign up for a new M1 Finance account and fund it $100, you'll get a free $20 just for that. So if you want to, if you're not going to use the app, you can always just deposit that money back into your account. And it's easy as that, free $20. So links down below. Go check them out. Thank you so much for watching, and God bless.